Hi, everyone, and welcome to Mish's Market Minute with Mish Schneider, sponsored by StockCharts TV. We have another full agenda, so let's get going. I thought today I would do something a little different. Usually I kind of pick a theme and we stick to the theme. So 2 weeks ago I did the transportation theme, and some of those stocks continued to roar like FedEx and UPS, while some of the airline and cruise ship stocks are still trying to figure it out. Then the following week, I did biotechnology, and we've had some of those stocks moving up that we featured, and yet the whole biotech industry right now is also, in terms of the IBB, starting to move up. So rather than sticking to a theme, I thought what we would do today is look at I picked lucky 13. I didn't want to do 10, and I didn't want to do an even number. I thought 13 would be fun. And so these picks that I'm going to bring you, they really actually cull from all the different sectors that I have gone over with you for weeks and weeks, from commodities to transportation to new issues to small cap growth stocks, and a couple of things in between that. So emerging markets, another one that I've done a while ago. And so this is not necessarily going to be presented to you in any particular order in terms of what I like the most to the least, just a random look at these 13 stocks. But first, I thought it would be really good for us to take a look at the macro, because it's always good to see what things are happening in terms of the overall market picture, particularly now as we get closer to the election with such news-based headlines like there is a stimulus, there's no stimulus, they're talking stimulus. And then also in terms of those stocks, I wanted to make sure I gave you some that are momentum stocks that are trading near their highs and have good relative strength over the last 6 months, and those that have been underperforming but may be ready to take off. So here's a list of the stocks right here that we're going to get into. Some of these are ETFs, not necessarily stocks. You can see the food related, a couple of others. So I'm not going to go through the list now. I just put it here for easy reference. When you want to go back and take a look at a particular stock, you'll know which ones I covered. Okay, so let's get going right now. I'm going to do a Control-Alt-Tab and go right to the Okay, great. So let's start here with the indices, and let's go with Qs. And Qs, as you can see here, has cleared the 50-day moving average and is now back into a bullish phase. And today started to gain a little bit of momentum. The 10-day moving average is underneath the 50, so we still have a lot of room for either failure from these levels as we get into resistance right up here at around 283, or if we can start to see that 10 move up over the 50, more momentum, which who knows, can bring us right back up near that 300 level and possibly beyond. A lot is going to depend on what happens with stimulus. The one concerning factor I have right here, though, is if we go down a real motion, you can see that where we have cleared the 50-day moving average in price, we have yet to clear the 50-day moving average in momentum. So there's a divergence. Now, that doesn't necessarily mean it's negative, but we definitely either like to see the opposite, where the instrument has cleared the 50-day on real motion and not quite yet on the price, or that they're totally in line with no divergence, which means the momentum and the price are sort of neck and neck. And of course, we have seen the Qs outperform the SPYs for a lot of the years, particularly on the rally, and then of course it went under on that big dump when tech led the way down, and now here we are back above. So now let's move on to SPY. And this now, just today, being Thursday, confirmed the bullish phase over the 50-day moving average. This is nothing here because you can't compare SPY to SPY, so that must be some kind of a bad print. But down here on the momentum indicators, same thing. Hitting the 50 hasn't quite cleared the 50. So that's why I say we're at a very vulnerable spot here. Even though everything looks good, we still have VIX, by the way, that is showing also some green, which means that there is a little bit of fear in the market. On the other hand, if the stimulus goes through, I think you'll see this thing raw. And if it doesn't, that's why I'm saying I think there's momentum indicators are showing us that we're not quite yet in the bullish momentum that we're seeing here in the price. So the real motion indicator is actually sometimes smarter than what the charts are showing. And now here's the Russell 2000. Now, what is interesting, because to me this is the best hope for a sustained rally, is you want to see the small caps, or what I call the grandpa of the economic modern family, participate, because that's really where you see the true economic recovery happen. If we put stimulus on the side and we just look at some of the statistics that have come out in the recent week, we have seen manufacturing increase a little bit. We did see the jobless claims go down, more people employed than we saw a week before. So there is some good numbers. Housing starts have been great, and that's really why we need to see IWM participate. And it got right up to the 50-day moving average here on the close of Thursday. But look down here, this, unlike the Qs and the SPYs that are over the 50, is actually, I mean, under the 50 on the real, over the 50 in price, but under the 50 on real motion. This one is actually over the 50 on real motion. So that is also very interesting, and maybe starting to peek its little head above, outperforming the SPY. This would probably make me a lot more friendly to the market. I would call myself now more neutral to friendly. And then just to wrap up the indices, we have to look at the diamonds. They too are in a bullish phase, and yet this also has better momentum than what we saw in the SPY and the Qs, in that the real motion is actually over the 50. So I'd say there's no divergence here, even though it's still underperforming the SPY a little bit. So the ideal situation is bullish phase, bullish momentum, and outperforming the SPY in terms of a benchmark. Now, of course, this is the blue chip stocks, but nonetheless, for example, Boeing, which is one of the big ones, has tried to base here, and that's going to help this a lot. Now, let's move on to just a couple of the sectors to look at, just to follow up since I've covered them. Retail also today, XRT cleared the 50-day moving average, started to outperform the SPY, hasn't quite caught up in momentum. Another really big piece of the picture here, because even though wages came out today as declining, consumer spending has actually been rising. Consumer confidence has also been rising. Very interesting time we live in. None of the typical rules really apply anymore. If we go to transportation, this is what I featured last week. Now, what's interesting about this is that it is in a bullish phase, and has been in a bullish phase, which is why I featured it, because it was one of the stronger performance when the indices were all under the 50. This was holding above the 50, and I thought that was super interesting. But it's now kind of getting a little bit tired as we're getting into the end of this week. And that doesn't mean it wouldn't continue to go up at some point, but that also tells me that the opportunity may still be here. So I would like to see a close, let's say above 201, 202 as we end the week on Friday. That would make me actually much more convinced that this will go up. We can see here that it's now underperforming the SPY after outperforming the SPY, interestingly enough. And there's no real particular divergence in momentum, because you can see that's come off the highs, but still well above the 50, just like the price has. Now IBB now also still has a divergence. I had shown this to you last week, but now it's starting to come and tackle at least the 50. If this thing can clear in momentum above the 50 and the 200, it's already outperforming the SPY. And you can see here that the 10 now is starting to meet the 50-day moving average. And we started to get a little bit of a shift in terms of it climbing above the 50-day moving average. When we talked about last week, we said it had to clear the 50, and by all means it has. So for all intents and purposes, this should still be a sector that should do very well. And if we can get through these levels right here, all this resistance right here, or at about 137, 138, then I don't see any reason why this can't continue to go up, unless, of course, the whole market falls apart. And then finally, we have to look at, no, not finally, we have two more to go. We have to look at the weak link, which is the regional banks. But they did have what we call a reversal pattern, made a new 60-day low, inside day after that, and then gapped up the next day, closing above the high of the day it made the new 60-day low. So really, this could be an interesting play. This could be a laggard that catches up, especially, look at the real motion down here. This is actually sitting right on the 50-day moving average, starting to show a positive divergence in momentum to price. You don't necessarily have to wait for this to clear the 50. I would say a weekly close over 36 should be good enough. And semiconductors, of course, always loves to be the leader. But again, just now starting to clear the 50 in momentum, where it's already climbing high above the 50-day moving average here, and the 10 crossed over it today. So this too really has to get through this 181, 182. This was the high of the day when it reversed course. And then again, it will look much better for the overall market. Okay, so now let's move on to some of the picks. Let's start with some of those food commodities. I've been all over the food commodities for a long time, since January really, and now they're starting to make me look really smart, because you can see that the USDA report came out on Wednesday and showed that there is shortages. Not that that's any big surprise, but obviously the market got a little caught off guard because it had a big rally, and corn is now above the 50, above the 10, above the 200. When we've talked about corn in the past, we talked about it back here when it was already showing a divergence. See this and see this? This is where real motion is an incredibly powerful indicator. This was telling us, if we were just a little patient and got the confirmation here above the 50, that it would be a good opportunity to get long. And at that point, this was trading about 12.10. Now you can see it's gone up, so trading up to 13.24 as of Thursday's close. But more importantly, it could be getting a little bit extended here after yesterday, may need a little consolidation, but if it holds 13, I think that's still, I think it's just getting going myself. But, you know, I've been wildly bullish these things for lots of different reasons, the dollar being down one of them. Now let's turn to wheat, because we did cover wheat also. And again, look how beautiful these divergences work when they happen. The 50-day moving average here cleared on real motion. Once you waited for the 50-day moving average to clear here in the wheat, you had an opportunity to get long at 525. Of course, this doesn't move very much, but it reached a peak of about 580 yesterday, and now is having an inside day as of Thursday. I'm looking for either a dip to around 555 if they can get down there. If not, I'm looking for a close on a weekly basis at 570 as another opportunity. To me, this looks like a huge basis form, and if we get long and it can actually clear back above these levels that we're going back to March, that could look also really good. And of course, I've talked a lot about sugar. We've been long sugar for a long time. Now, again, divergence here happened. Well, actually, this was really interesting. This actually has never, except for the brief period here, and not convincingly, broke down under the 50-day moving average in momentum. So the momentum in sugar has been positive all along, even when you have some of these down days. And it's been outperforming the SPY, interestingly enough. Now it has its next test here at the 200-day moving average. So you get a couple of closes over there, then I don't see any reason why this can't go up to about 750, maybe even to 8. The bigger thing is, what is the ramifications of these food commodities going up? One could be the stagflationary environment we've talked about, obviously with GDP has showing a shrinkage. Two, could be the climate change and food supply chains that we've had because of climate change, the big fires that we're seeing obviously out west. And three is going back to supply chain disruption with labor force down globally. The food demand goes up. In rough times, people will hoard food. When I say people, I mean countries will hoard food. And this is something I've been talking about for a really long time. And then also cane or sugar sometimes is a precursor to inflation coming, even could be a couple of years ahead of what you might see in some of the other areas like the metals. Okay, so now from food, let's talk about dog food, but not really dog food. CHWY, which is a really good place to go to look for potential trades, because this is online. In any kind of recessionary environment, people still tend to buy for their pets. It makes them feel good that they're taking care of their pets. Sometimes they'll treat their pets better than themselves. I may be a little guilty of that myself. And so right now, what was interesting about CHWY was that Thursday turned out to be a big day for this stock, because it opened up on the 50 that it's been up and down, up and down, up and down, up and down. And then today it took off. Now, also for the first time since it peaked back here, it's outperforming the SPY. The momentum, though, still has a ways to go. It hasn't even gotten to the 50. So at this point, I would say that it has to hold 57. If you really wanted to look at it a little further, you'd say 55.75, which is the 50-day moving average. And if it can continue up and clear, let's say 60.61, it's very easily can go up to 70. Maybe by that point, this clears the 50 and it's time to actually take some profit. Next up, we're going to look at a transportation stock. These are random here, so I showed you this last week when we did transportation. The reason why I'm fixated on this is a couple of things. First of all, the Scorpio Tankers is one of the few stocks you can actually trade that's not a Chinese stock, that's marine freight. And if you go back and review that part of last week's presentation, you'll see I talked about that. Two is this made a new all-time low here. And then immediately popped up, leaving some kind of a reversal pattern. Three is, although it's underperforming the SPY as one would expect, we are now starting to see again a positive divergence here in the real motion. So I actually have an order to get into this stock on a Friday, being the day you'll see this video, if it can close above 1147 with a stop under here. That low is 1022, so a stop about 1017, because I want to see if this thing actually can get some traction, at least move up to the 50 and maybe even beyond from there. Okay, let's go. Next one is, let's talk about, I'm just crossing off my list here. Let's talk about the next one here would be kind of commodity related, and I think I may have talked about this one with you before. This is FVAC. This is a blank check company. We've been hearing a lot about blank check companies lately because they have been financing what we call SPACs, or that's the special acquisition companies. And that's why some of these new issues have been going crazy. We'll probably wind up with some level of investigation on that because it all seems to be sort of under the SEC wire, and now they're paying attention. But nonetheless, this one particularly interests me because this wrote a blank check for rare earth minerals mine in California, which is the largest one that we have in North America. And of course, you know, we use rare earth minerals to power some of these electric cars and these batteries. And so this is what made me interested in this. And we're actually long from all the way down here. But I don't think it's too late. And that's why I'm showing this to you. We don't have enough information for any kind of real motion indicator, but we can look at this. It's still underperforming the SPY here, but what I like about it is we are now starting to see this 50-day moving average. We have the 10-day moving average, which it cleared, and if you look at the whole pattern as a whole and you put a line straight across here, you could say that a move and close above 16 should really take this and bring this up maybe for another $3, $4 move higher. It's very possible. Okay, next one on the list is in that family, Ballard. Wait, hold on. BLDP. And Ballard also had a nice big move today, but again, hasn't shown a divergence here, starting to outperform the SPY. But if we look strictly at here, we had the 50 and the 10 converge with this move up right into some resistance. And then you have more resistance here. So I wouldn't necessarily just jump in, but I would like to see some level of consolidation here between, let's say, 16 and 1670. And then, or even 17, if we can get some consolidation there, then I think you'd have a better opportunity to get into this, unless this thing just winds up flying. Keep your eye on it. And of course, again, we want to see the momentum catch up. I'm surprised this didn't get a little bit higher after this kind of move that it had on Thursday. But nonetheless, Ballard is a power system, also battery related, like plug, which is something that I showed you a long time ago as one of the new issues. Okay, now, from electric cars to just cars in general, we have to look at Uber. Now, I really think this chart is extremely interesting. This is what I would consider to be a momentum type trade. Because if we look at this, first of all, we are well over the 50 in real motion down here. We are well over the 50, obviously, in price. And we had some good news. The license in London was able to keep. And I also think as people come out more, the Uber people will actually start using Uber again in some of the major cities. But look at this high that we had here in June to this high that we had here in September are pretty much at the same level. We're looking at roughly 38. So if we can get through 38, if you look at this whole thing as a giant sideways base, then I think that means this could probably go up maybe another $8 from there, maybe about 45, 46. I would not be surprised to see that. And then, of course, where would I risk if I got in over 38? I probably would want to see this hold about that 35.50 level. So that's another one on the list. Okay, now let's move to sort of a tech stock. It's a relative new issue as well. It's called Cohu. Well, actually, this company's been around forever, but the stock hasn't been around forever. What's interesting about Cohu Inc., by the way, is I had to look it up. So what they do is semiconductor testing and inspection handlers. So it is in the tech, but instead of creating actually semiconductors, they actually inspect and test them. So it's kind of like a service industry for the tech space, which I thought was really super interesting. And again, this had a divergence in real motion in that it cleared over the 50-day moving average before this did. And now this finally did on Thursday with good performance outperforming the SPY. So I'd keep an eye on this one as well. This is not in a bullish phase. This is in an accumulation phase because the 50 is still under the 200. So you really have your support here between 1730 and 18. So somewhere in that 1730 to 18 range probably would be worth taking a shot, maybe getting out if it breaks down under 17. And of course, if it can then get through today's highs or Thursday's highs, you know, this could easily get at least up to 20 before we take another look. So I thought that was another super interesting stock to look at. And then if we take a look at HOG, sort of in transportation, you know, Harley Davidson has had a lot of issues, obviously, has been under a lot of pressure. But I thought the chart right now was super interesting as well. First of all, it's well under the 200 and the 50. And this had actually a positive divergence last week when it held the 200 and then came back. At the same time, it had a reversal bottom at 22.50 and then the gap up. This was a new multi-month low. And now it's cleared back over this 10-day moving average. So to me, what this looks like right now is that if we can hold, let's say around 24, 25, it's possible that with this positive divergence, if it keeps going, we can see a move up through these moving averages, maybe back up to 30 before we take another look. I just thought that this was an interesting chart. As I said, I wanted to show you momentum plays like what we saw in CHWY. And then I wanted to show you, or Uber, and then I wanted to show you beat up stocks that could be turning around, like we're looking here at HOG. And then we have FSLY. This is a small cap growth stock. And this actually is also in the technology space, but it is a small cap growth stock. I may have shown you this one before, but this is also doing very well. However, look at this down here, hasn't quite gotten back over the 50-day moving average in real motion, even though it's gotten over it here on the price. So we've got some good resistance here between 98 and 100. At this point, I would probably say that it should clear 100. We've been in this now since 83, so you're getting in a little bit after we are, and we've taken some profit. But I'm looking at from 100 to 105 pretty easily. And then, of course, if we can fill this gap right up here, then we're looking at the possibility of this moving much higher too. And as I said, all of this so much depends on what happens with the overall market. So that's the caveat. The last one I'm going to show you here is an old favorite, emerging market trend. We still have skin in this game too. And this is Vietnam. Now, Vietnam has been a little bit frustrating to trade because it's all over the place. But nonetheless, you can see the trend is definitely up. Low, higher low, higher low. But right now, it just cleared after a golden cross and a test of it. And look how beautiful that was. It's a nice place to get into it right here. We were long actually a little bit before that. it went up to 15. It got all the way up to about 15, didn't quite make it past 15 and sold off, breaking down underneath the 50-day moving average. And now coming back over the 50-day moving average. So 15 to me is a good spot. If 15 clears, and I'd like to see it on a closing basis, some of these thinner instruments like VNM need to have more of a close as opposed to an intraday move. If it closes the week out over 15, I think you have about a 40-cent risk here to under the 50-day moving average. And if you saw a 200-week moving average, in fact, let me see if I can change this quickly to a weekly chart. Yeah, if you look at this, this has the weekly moving average at 1530. So if it clears 15, really basically what you're doing is you're risking about the 40 cents, as I just mentioned, anticipating that it can clear 1530 and keep going higher. Vietnam, to me, has looked good. It's been one of my top picks in terms of the emerging markets all year. And if we go down, of course, we see that it did break down briefly under the 50-day moving average, came back. Momentum is starting to do good. And if we really can see the momentum take out the 200 before price does, that would be very, very encouraging. So that's pretty much, I think that covered everything. Corn, wheat, cane, Vietnam, CHWY, Ballard, Uber, Scorpio, Hog, FSLY, Cohu, and VVAC. I do have IBB on the list, by the way, but I showed it to you in the very beginning, so let's take a look at it with fresh eyes. This is the BioTech ETF. Once again, looking at it right now, I say bottom line needs to hold around 134. The 10-day moving average comes in at 133.26, but 134 would really be what I'd like to see a weekly close above. It takes out 138. I don't see any reason why we can't at least get back up near the highs at 146 and possibly go higher. You can see here that real motion is behaving itself. It's still underperforming the SPY here even after it had been above it. So I'd like to see that shift as well. So I hope that gives you some really good trade ideas to review and look at in all different sectors. Again, some momentum, some more beat up. And thank you so much for watching. I hope you enjoyed. Have a good day. Write me on YouTube. I always answer. Bye for now.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.